I want to shift gears. We would be remiss if not to touch on the role that central banks played in all of this. Michael, you mentioned the Federal Reserve up front. The way I would characterize what we saw was that central banks essentially flooded the global economy with liquidity. And it wasn't just that. You could do that by cutting interest rates, but they also used unconventional policy tools, quantitative easing being the main one, to essentially inject all this liquidity into the global economy. They took additional measures to stabilize the banking system. It took some time, but eventually it got these economies growing again. Today, one of the primary narratives that we're reading about and talking about is what happens when central banks, and the Fed looks like it's the first one to be acting here, what happens when central banks start to normalize and pull back some of this extraordinary accommodation? We have some, there are some skeptics out there that say, look, all the markets are really just propped up by all this excess liquidity. What happens when it goes away? And Michael, maybe I'll start with you and get your sense of how you would characterize what's happening with central banks.
Sure. I mean, we have a more construction interpretation of the withdrawal of central bank liquidity. If the patient is healing, and that's the reason why the medicine is being drawn out, then that's fine.
The patient being the economy.
Of course.
Okay.
And so the global economy was in a dire state where credit markets were broken here and in Europe. And central banks felt that zero interest rates were just not enough to resuscitate the credit markets, and so they had to use unconventional measures. Now we're seeing a credit growth improving even in Europe. And it's time to take some of that medicine out. In fact, if you don't, then that could be a precursor of another problem. It could be an asset bubble problem. So I would say it's prudent for central banks to take out some of that liquidity, and if it's been taken out gradually going forward to the point where, say, we see a few $1 trillion being cut out of the system, I would say it's only because the patient was allowing that process to happen.